is Justin Pulitzer. This is my midweek video for Wednesday, December 20th, 2023. I'm filming this on Tuesday the 19th at 8:42 p.m. So we've come a long way in the last 2 weeks. We got through the jobs report, the CPI, the Fed. We still have the PCE and GDP revisions coming up. Volume is starting to get thin. I think they just cleared 1 million contracts today, although there was a pretty big MOC with $2 billion on the close imbalance for buyers. The Atlanta Fed came out. They raised their growth expectations, which is odd because we just had Powell and they had lowered their growth expectations. Just to caveat, Atlanta Fed has had huge revisions before, so I don't really read that much into it. We've had some M&A. Macy's got a bid. U.S. Steel got a bid. I don't know if that's going to actually wind up going through, though. They may try and block that for strategic purposes, national security and strategic purposes, I guess. The Fed heads now are trying to walk back what Powell said. It's a little late to do that for a few reasons. One, he already said it. And two, we saw the dot plots. So it's sort of like trying to bluff after the opponents have already seen your cards. So, yeah, I mean, I just don't see how that's going to work out for them. We had FedEx report after the bell. Not so good, not a surprise. They sort of haven't been a very well-run company for many years, and I think UPS is just eating their lunch because of Amazon. On Wednesday, I guess today, depending on when you're watching this, because probably after uploading and processing time, it could be after midnight, we're going to have Micron report. They're trading up near channel high, and that could be something. We had a little bit of weakness in SMH today after Michael Berry said he's, still short the semis. We have Nike on Thursday. That could be interesting for retail, for Lululemon in particular. And then Friday, we have the PCE number. Sentiment, not that impressive. 50%, given the rally we've had. I could even make the case that this is tame. But we've seen a lot of, I guess, would-be bears move to the sidelines, so indicative of short squeeze, which is no surprise. Like I said, in the economic calendar, we have a couple of key things. Consumer confidence will be important, existing home sales, but what I'm really more interested in is the GDP number, always initial claims. Philly Fed has been interesting. That and the Empire State manufacturing numbers have just been trading blows for being who could be worse. Then there's this big rebound, let's say in one report, and then it just goes back to being terrible. Durable goods orders are going to be important. PCE, that's the Fed's inflation gauge of choice. I'll tell you, if that number comes in hot, things could get a little bit dicey. And then after that, we're off for Christmas. Monday is Christmas Day, so we're off. So holiday shortened week. Be mindful of that if you're long premium. As far as the Fed gauge goes, there's a lot of talk about how many rate cuts the Fed is going to actually do. I'm not really thinking that's going to matter that much until the calendar flip into the new year. We're into sort of chase performance at the moment. Some people even believe they're going to cut as soon as January. I'd say that that's just foolish. Powell would have signaled that, and he didn't. So people are thinking March, 67% thinking that's when they do liftoff. May, they're thinking maybe another cut. June, I mean, it's starting to get, as you see, it's starting to get a little crazy here. The pricing and all these cuts with the market at all-time highs, it just doesn't seem like that's going to happen. 2-year, a little bit of a bump up, but it's well off its 5% plus days. Probably see some resistance now if it gets close to 5%. 10-year, just going lower. This is great news for anybody who needs to take on credit. Could be some support coming in soon, though. So 3.8%, 3.59, 3.6 area. I think that area is going to hold. I'd be very surprised if this got down to 3.5 and just stayed. I mean, it's probably due for a little bit of a bounce. Things just don't go in straight lines. So just keep that, in mind. As far as the VIX goes, it's been building a little steam here, maybe a little pressure. We saw this sideways move with threats to go higher, but we've yet to clear the 20 MA. You see, I have an alert over 1275. It wouldn't surprise me to see that fire off here. Anything up over there could make a move up to maybe the 50 MA in the backside of the old uptrend. So, I mean, could we go lower? Yeah. I mean, maybe we even get down to single digits before this insanity is all over. But I would say we're at reference lows, and it's pure directional play here, meaning buying calls, buying call spreads, or buying puts and buying put spreads. I don't really love selling premium unless you're doing some type of ratio play, longer dated. You might even want to just do it shorter dated, because longer dated has a lot of risk. I mean, you could have just volatility risk. Forget just, directional risk of the market. If volatility just starts picking up, which I would assume would be moving lower in the market, but let's just talk about that one component. I mean, this is the vega component of options pricing, and price going against you will be very painful. So those overrides could come under pressure right quick. TLT, it's actually acting pretty well. I mean, 98.85 is really where it broke down from here. And we hit it, pulled back, couldn't even get the 200 MA. By the way, back below the 200 MA, I would think short, 97.39 currently. But as long as we stay over there, we could see 101s. And that could be better, good news for the market. Yeah, granted, TLT is the 20-year, and we usually like to look at the 10-year, which we'll get to in a sec with TNX. But could we get back up to 101s, maybe even to 103s? The way things have been trading lately, it wouldn't really surprise me, but I do like trimming a little here and raising stops nonetheless. Remember, our job as traders is to not necessarily catch the exact top and the exact bottom, but to try to catch the meat of the move, the bulk of the gains. Trying to catch those last few, cents or points often can be the most costly, because if things really don't go that way, they can, be problematic. TNX, we expected this area to be some support, and it has been 38.79 to 39.05. If that breaks, 37.03 to 36.44, with 36.54 being the 2.618 fib extension from this sort of quasi head and shoulders. So I wouldn't really start getting too concerned about this unless, and this is a big unless, we get back up over the 10 and 200 MA. 40.71 and 40.31, and I guess falling in the 10 MA, but if that clears, we could get it bounce up even into the 41s, and market won't like that. Market needs lower 10-year yields. That's the key there. KRE, popping up here. It's not quite back to the breakdown level, really, which was 56.09 to 56.67, but it's holding okay. I mean, we got up to the 38.2, gapped. It's been holding. As long as we're over 51.44, I think it's fine. I would think a pullback here to 49.57 to 48.02, likely find some buyers. That's the breakout zone. Remember what we've said, things over the 10 MA, we like to be long. If there's pullbacks, the 20 MA is the must hold for health. So I wouldn't be short, really, unless we get below the 10 and 20 MAs. Anything, pulling back inside that zone, I guess, can still be bought. Goldman Sachs. We are nearing reference highs here from back on 11.15. Nice little bull flag here. If there's a pullback, the key kind of breakout zone was 361.62 down to 358.62. If that were to falter, 351.29 to 347.46, but we're kind of close, so close to the old high, it seems to me like they're going to test it. So I might use that opportunity to trim into if we start approaching the 400 area. You can see this 401 area was a big fight. This 390 to 393 range, I think, would also be an area to trim into. Dollar. This has been very helpful to a lot of multinationals. This is probably why you've seen a lot of stocks, particularly Meta, rallying. They always complain on their conference calls when the dollar's strong, so I guess they're beneficiaries when the dollar's weak. Bit of a dubstep setup here. We lost those moves, but not in a dramatic fashion. For the bulls, meaning stock bulls and dollar bears, they need to get below 101.915 to see 100.82. I have an alert set over 102.804. If we start clearing that, I think we're going to probably pop up to the 200 MA at 103.50, and then we'll see. That would be a check back to the backside of the old channel. Remember, we spent a lot of time on the top side. It doesn't surprise me that we're having some symmetry on the downside. So I wouldn't get too concerned about bounces, although the market might not love them. But if it does start clearing the 200 MA, then I'd get concerned. Gold is acting pretty well, actually, up here. We are into some resistance between 189.64 and 189.99 and channel high, so I would trim. I think if you want to be short below 188.13, basically the Tuesday low makes sense. And if you want to use that as a stop, I'm fine with that as well. So we held, the first line of key support. We're back up into some resistance. I mean, if we're going to go parabolic in this, there's lots and lots more room to the upside, but as I always say no one expects the Spanish Inquisition, and I can't anticipate those types of moves, but I can go by technicals, and I know we're near channel high, and I think it's still a good opportunity to trim some gains if you bought the dip, considering if we did fail here, it would be from a lower high, and it could be problematic. Bitcoin, everyone was going crazy in the overnight on Sunday. I said it's testing the key zone of 40,085 to 41,040, and really the 20 MA has been the key support, and we bounced off it pretty well. Our end range target for the bounce was 43,530. It bounced and now is pulling back. So now, what now, really? We're caught between the 10 MA and the 20 MA, so I think you can remain long or buy dips as long as we hold the 20 MA. If we start losing the 20 MA and we start losing the 41,040 to 40,085, although I sort of reversed the order this time. I used the top number first before I used the bottom number first. But as long as we're holding that zone, I think it's sort of okay. Just bull flaggish below there. Maybe 50 MA retest at 36,699 and rising. Coinbase, I think, will probably continue to rally as long as Bitcoin is strong. Could we even get up to 208s? Possible. I've said before, I'm bullish as long as we're above the 10 MA and over 143.71 for a move to 178.37. It seems to me like this could keep going. We are in kind of parabolic mode. So I don't really get bearish until we start losing the 10 MA. I am mindful the money flow isn't really confirming here, but in thin markets, these things can happen. And I think when they do launch the ETF, that'll probably be the top of both Coinbase and Bitcoin. Sell the news. Every time we've seen these events, whether it was Bitcoin futures, Coinbase IPO, it always marks a big topping area for the currency, cryptocurrency. Oil getting a little bit of a bid, BP being the latest to circumvent waters where the Houthi rebels are shooting at ships, delaying oil deliveries, and of course raising prices when you're spending more to deliver. As long as above 72.37, I think it's okay. Maybe we mosey on up to 77.59. Still in a downtrend, so rallies probably are still shortable, but we are seeing some higher lows, and maybe there's a little bit more bounce to be had. We shall see. XLE, I also think XLE is probably going to get some beginning of the year money flow. It just usually does. There could be a move up here to the 100 MA, 87.28. But to do so, the bulls need to clear 85.67 and hold and get over the 50 MA. So long above the 50 MA for a move to the 100 MA. Anything in between the 50 and 20 MA, I think, is just sort of neutral at this point. And if we lose the 20 MA, I think we're probably got problems, because that was the pullback dubstep low here. This pattern, quote unquote, should see higher. But if it doesn't, just stay frosty, as we often like to say. Stay on your toes. XBI, I'm hesitant to call it the crap, but this is definitely a case of laggards catching up. I think people were looking at things that weren't rallying that could have some momentum moves behind them, and they decided to trade this. We were looking for this move, and maybe even a little further here, but this is a little more than I had expected, to be frank. The 10 MA is held on pullback, so as long as the 10 MA holds, I guess BTD, if it can hold, we'd likely see the 20 MA and 200 MA confluence, which may now be support. Pattern still looks all right. I think 85.10 is a hard stop, though. Below there, that's the 78.6 of the range. If that fails, we could pull back, even to as much, we go from fib to fib, MA to MA, maybe we do check back to 80.55. But anything over 85.10, I think, risks a move into the 90s. So keep that on your radar. TAN, one of the things we've watched in the past. We haven't so much lately. I think as long as it's above the 100 MA, the risk is probably to the 200 MA, given how crazy these things trade lately. I'd start getting bearish again, back below 50 bucks, or if you want to just use low of day, 51.42. First real resistance is 56.08 to 57.95. We run into the volume distribution starts picking up around the 200 MA, which was resistance back here on 718. So I'd probably be a seller at 61.19 to 62.97, that zone, depending on how long it got there. If 200 MA comes lower, just sell the 200 MA. It's my guess. It's probably good for a back-off scalp play as well for you intraday players, intraday ballers. All right, let's talk about something important. Always be closing. Anyway, any opportunity to quote The Godfather, Glengarry Glen Ross, and a few other movies, I take them. Look, we're stacking up VWAPs, meaning rich closes, prices closed away from them. I mean, if you want to write these down or mark them on your chart, we have 46.48 quarter from 12.8. We have 46.65 half from 12.11. We have 46.82 half from 12.12. We have 47.28 from 12.13, which was the Fed day VWAP. Let's continue. And now we didn't have one after that. We do now have one from today at 48.09 half. So very simple. We'll see if we make a new high in the overnight. We did already in the NASDAQ. We'll talk about that in a minute. But shorter term, that 48.09 half to 48.17, which was the breakout from the morning high, has to hold. If not, we're likely coming back to 48.02 quarter. And then 47.91.75 to 47.89, and then we'll see the 200 MA 15-minute. This is on a 30-minute chart. It may be accurate as well, but that has been the key support on pullbacks, probably an area to cover into and even look for a reload. And by the way, if we open down in the morning, let's say there's some overnight pullback, look where the channel low is. It's right at that 47.89 to 47.91.75 breakout. Let's do the time warp again here from the Qs. A few things to note there. The Fed day VWAP actually was repaired. I was just looking at breadth, by the way. As much as the Qs were up, only 3-to-1 positive breadth. I mean, don't get me wrong, that's pretty good. But NYSE was 6.44 to 1, which is better. 1700 AD line, this is a pretty strong AD line. I was mentioning in the ticks, the NYSE tick was a little middling here, but I would say you go by where the closes are, and they were largely above the zero line, which means buyers. And the Qs, they were, with the exception of, two candles, they were all positive closes above the zero line. So definitely a interesting accumulation day. It wasn't like a full short squeeze either, because we weren't pinging, and just keep on banging the 1000 line. Often when you get a lot of bangs against the 1000 line, it's just capitulation to the upside. Same to the downside. When you see the market just in free fall and it just keeps banging and banging off the 1000 line, it's overdone. So there's that. And I already talked to you about the VIX. So VWAPs on the rich closes for NQ, 16,253.75 is one from 12.8. The 12.11 one, hold on, 16,371 even, 16,371. 12.12 was 16,494. The Fed day VWAP was 16,688, but we corrected that, so that scratched off our list. And after that, sorry, it's taking a long time. We've just traveled a long way in price. There is a mini one here I need to add in, actually. This was from the 18th at 16,000. Hold on, what was that? Let me zoom in a little bit further. 16,896. So 96 VWAP, and that's 12-18. Is that correct? I believe so. So that's one to add to our list of horrors. And then the one from today, 16,981 half, 12.19. Now, the interesting thing about the Qs, and I had mentioned this before, we could have a liquidation break. It's very possible. But we now have a new high in the overnight session, which is rare for things to stand. The most notable one I've ever seen is the 2011 when Osama bin Laden was killed. That wound up being the spikes of all time, and we had a huge correction after that. I think the market was down like 20%. So it can happen, but without exogenous news, it's rare for those to hold. We haven't inked it yet in the overnight with the ES, although I suspect we might, given the Qs have done it. So, like I said, there could be liquidation break. The first big key line of support will be 17,012 half. After that, 16,981 half, which is the VWAP, to 16,973 half. Then we'll see. If that fails, we can pull back to 16,896 to 16,885, and then that's a very key level, particularly that 16,885, because this was a multi-day high where we broke out from. So that really should be support, and it'll likely line up with the 200 MA, 15-minute, and 30-minute at the time, and I would probably cover shorts there and maybe look to buy dips or sell some OTM footage. I mean, if that fails, we could easily check back to the Fed day high at 16,818 to 16,806 half, and then we'd really have to see. That would be a pretty big pullback. All right, let's talk SPY. I had mentioned in my super follower video with you, ladies and gentlemen, that I thought we were so close to the all-time high here at 479.98 that we would maybe just get there. Same thing in the Qs. Expected move here is $4. The max pain pin is much lower. I shouldn't say much lower, but it's around a little lower at 470. So it's come up quite a bit. If there's a larger liquidation break pullback, I'm thinking we would retest 459.44 to 462.07, but more importantly, the 20 MA area, and maybe just the 10 MA holds it on pullback. So we could continue higher. I think if you're long, you could use low of day, 472.45 as a stop now. You don't really want to see price get below there. And if we do have some type of a blow-off move up here, that would be some resistance. I'm just curious if in January, if they just go full on nuts and get us up to 500, and that marks like a high for like a while, you know? So I don't want to jump ahead of things. Expected move, like I said, is $4. I'd start probably looking to short rips if we started getting below 467.42 shorter term, because that would probably be below the 10 MA by the time we get there. But as long as that area holds above there, it's still sort of fine, but I do like raising stops now to at least low of day. And if you haven't booked any at 473.54 plus, you might want to do so into some strength here. DIA, I've been thinking it gets up to the old channel high, and that turned out to starting to look pretty good. 377.92 if it were to do it tomorrow. Pullbacks here, I guess the 369.5 to 371.15-ish area, although we don't do 15, so it's just 371 to 369.5, and likely lines up with the 10 MA, so that would be a check back to the old high. If that fails, could we come much lower? There's not a lot here to really hold it. I mean, you start getting the volume distribution around 365, so I would think 20 MA. Longer term, could we get a pullback to 356.76 to retest the breakout, maybe in January or February? Maybe. I mean, this is a real big power move. I mean, this is coming up from the bottom and like continuing to run. It's very rare to see things like that just take place. If you take this W pattern here, and you project the gains, I mean, we're over the 2 times range, we're over the 2.618. I'm going to maybe even have to start using the full range here as the, gauge for the 2 and 3 times ranges or what. 2 and 2.618. But I do think this channel high area will be some resistance considering we've come up so far so fast. So mark that off on the charts there. And like I said, if it were to happen tomorrow, it's 377.77-ish. Forget what we said it was earlier, but it's close. IWM expected. DIA, by the way, the expected move is 293. Max pain pin 371. IWM expected move $3.69, max pain pin 195. So that would be looking for a pullback. Look, this was the fourth test here of the 198.75, so that's a great stop, anything below there. But if we do keep going, you know, the real big resistance comes in here around 208s, 209s. So maybe trim a little, 201.99, 204.84, and then I would be looking to bail between 208 and 209 if we do just, you know, keep going on full bore here to the upside. But careful if we start slipping below 198.75, that could be a look above and fail and maybe a short, maybe for a pullback all the way down to 190.81. So we'll see. Qs. We're right back to the old highs. So if we technically got below 408.71 and low of day at 407.35, that would, below the low of day, by the way, would trigger the look above and fail. We could pull back quite a bit, maybe to the 10 MA to 399.05, maybe to the 20 MA and the breakout over the 1129 high at 394.14, and potentially even a retest of 387.98. But it seems to me that dips are getting bought pretty quickly, and we could be on our way to a new channel high that I've drawn in. If we were to do it tomorrow, you'd be looking at 418, so maybe we do get 420 just to be ironic. I drew this in connecting the 313 low to the 1026 low, and I redrew as a channel, and I based it off of this 616 high. We did spend some time above it, but look where we stalled the next test. So that to me could be where we're headed, maybe 418s to 420s. Expected move into the Friday expiration is $4.34. Sorry, $4.35. And the max pain pin is 403. So they are thinking pullback, but not much at this point. And again, the option volumes are kind of chunky, so these things can shift. SMH, this is one of the things I had said why I thought Qs could go, because SMH was already well above reference highs. We were at a little above the 2 times range, which held on support, so I'd be careful anything below 172. The next big resistance up here is 183.12, so 183 because we don't, I guess you can in SMH do 12 because it's not futures, so 172.02. If we do get a check back, the big volume starts at 162s. Breakout was 165.44, so that area to me would make sense. Maybe they even check it back to the retest of the breakout here. I mean, maybe if Micron is really bad or something, back down to 161s. Just looks like a bit of a consolidation to me. If you're long and you're nervous, 162.91 was low of day from Tuesday. That makes a good stop to me. Is this auction ending excess here, and is this just going to consolidate and fall apart? Can't tell you. But I can tell you, I know technical patterns, and I know if you want to get short, you could try below 171.97. Actually, I'm going to put an alert here. 171.96. So, stop longs, try short, right or right out. Could use the close from the day as the stop at 173.34. NVIDIA. So, banged up against 502s again. I told you I thought there'd be some responsive selling, at least initially. We did get the pullback, but they bought the dip. I think as long as pullbacks hold 480.88 to 476.09, it's sort of okay, particularly above 480.88. If we clear I mean, the best thing you could do now is just consolidate here below 502.66 and then take off to really, you know, get the extension move, maybe even all the way up to the 600s. We do a 2 times range, we'll get at 613.02. So we shall see. AVGO, which is really Broadcom, on multiple time frames has exceeded extension levels. So yeah, there's some overboughtness. Just debating if I'm comfortable using the pullback low here or if I should use this pullback low. Because, like, look where this would take you. I mean, we're basically to the 2.618. I mean, if you haven't trimmed a little here, I mean, I don't know what you're doing. And if it, you know, gets any higher, I would just trim a little bit here and just keep raising stops. Technically, you have a mini dubstep here. So if you want to just use low of day of 1132.51 as a stop, I'm cool with that too. We were bullish on the move over the 20 MA, but I mean, this is now into, you know, multiple resistance extension levels, so probably a good area to trim into. LRCX. This kind of picked up the mantle for bullishness after NVIDIA couldn't go higher after earnings. They just started piling into this. It's been a very choppy stock. It could technically go higher. I mean, there are some extension levels up at 836.17. I think just keep trailing up stops. The channel high, if we were to get there, would be 818. The channel's a little dubious, though. I'll show you. I have it drawn in. It is not a clean drawing. I was sort of using my technical skills here, sort of like the Godfather. I'm going to call on you, use all your skills. So I connected the 1228 low to the 1031 low. I redrew as a channel, and I used these highs here from 1115. So that's an interim channel, which you can see we've traded on either side of. Then I did another channel, and I drew it from the 8.4 high. We didn't quite connect here to the 731 high. I was just thinking if I drew in a trend line, if we kind of like wedged it a little bit so it's a little bit lower and we went there, I mean, you're looking at 804s. I'd be trimming with an 8 handle. And I think if you want to use low of day as a stop, I'm cool with that now at 768.73. No need to get too greedy, but if you want to get out, if you're long, let's say you're long calls, make it a spread. Sell an upside call against it to hedge some of the risk. If you long shares, you could sell some upside calls and get out a little higher and generate a little bit of alpha. The thing I think, the deciding factor here could be this Micron. They are at the channel high also here. Is it just going to go ballistic like a lot of the other stocks? I mean, it's possible. Again, can't nobody, like I said, the Monty Python boys always say, nobody expects the Spanish Inquisition. So I'm sort of left wondering, are we going to just keep going, or is it going to stall at the channel high like it quote unquote should do? We'll only know as soon as we get the earnings. I mean, we seem to be in this sort of blow off mode where a lot of stocks are just defying gravity and they're just gunning it up. Tells you just how short people may have been. If we were to get rid of this and we were just looking here, I mean, we're above the kind of 2 times range of this consolidation. You can see this 64.44 was a big volume node, kind of divider. So, and it was also an old reference high from back in the day. If I wanted to draw this a little differently, I mean, I guess I could use this as the gauge, but I feel that that's a little bit of a stretch because we had swing lows in between there. So I'm comfortable with it drawn like this. But, oh, come on. You know what? Let me Control Z it. There we go. If you ever get into trouble and you want to go back to where you were, Control Z. So we're up here. We're on the channel high. We did pop up above it before in May. But we're chopping around here. I guess you could use the reference, the interim swing low here of 80.81 as a stop. Or 80.79. I'd be careful below there, but coming in on the channel high, you might want to trim a little bit. I mean, I'm not saying it can't go. We've seen this many times recently too. When you think things are extended, they just keep on it going. The 200 MA was a lot of support. If we were to get back down there at some point, I'd be a buyer. But up here, I think trimming is probably the prudent course of action. Tesla, we're right up to where we thought we would get, into the 260-ish area. Got stalled just shy of there. So I do like trimming there, keep trailing up stops into strength. Could Tesla just take off? Again, always possible, but this was our target area, so I do like trimming into it. Apple. Technically, we have a little bit of a look above and fail here, but we are holding the 10 MA, and I think if we were to clear 198.23, really 199 to 199.5 had sellers. So that could maybe clear. We did absorb some decent news. They're apparently pausing sales of the Apple Watch 9 and the, the higher end one. I forget what, the Ultra 2, I think it's called. It's the fancier looking one. But the older models will be able to sell, and that's going to start as soon as the 21st online, but the 24th in stores. So most holiday sales will have already been done, and my guess is either Biden will rule to help Apple out, or they'll, make some kind of a settlement with the watch, or they'll rejigger the technology. But, the pullback was just to the 10MA. I've told you pullbacks to the 20MA are still, that's sort of the max allowable pullback, but we're holding 10MA, so that seems all right to me for now. Wouldn't surprise me to see Apple catch a little bit of a bid, particularly in the beginning of the year with allocation money. Microsoft, we're just in this like pennant here. I need to see it over the 20MA. If we get a gap up over the trend line here at like 375.53, or what is the high here? Hold on. Let's just say 375s. I think it could go, but I'd be careful if we start losing 366.78. I think that could lead to a larger pullback. Adobe, they canceled their merger or their buyout, and the stock rallied, and they had to pay $1 billion, but the street seemingly liked it. I think they're using some of the money they were going to use on the merger for share buyback, which the street always loves. I'd be a trimmer here at the channel high. We already pulled back a bit here, so if we do get up to 608.63, back to 611s, I'd probably trim, and if you're long, low of day at 598.08 is a good stop. Intuit, also JP fave, but really getting nosebleedish here. It looks pretty bullish. I mean, we took back, that kind of big body reversal candle, and if we were to get to 628.94 to 663.08, you probably want to trim. That's the 78.6, but we are up into channel high. Granted, we have seen price action on the wrong side of channel high, but it hasn't been that much, so I think the easiest money has been made. Pullbacks to 599s is the must hold, because that was where we really broke out from. It'll line up with the 10MA likely then, so into some strength that you might want to trim up some Intuit. Meta, still boss, but another test of the channel high and pulling back. I'd be a little careful. We stalled just shy of it the last time, but we did get it here on 10.12. So if we start slipping below the yellow channel, basically low of day, 345.12, you could probably try short. But again, I think it's going to be sort of a little frustrating. It may just grind and chop around. The stock is not quite in clear air. I guess there's some room up to the old all-time highs, 384s, 385s. So maybe that's where we go if we do get some kind of blow off. This is a nice accumulation funnel, but pullbacks from the channel high have happened and they've been big. So don't just assume it keeps going. I would trim a little up here at the channel high. Google, it seems to me that people were looking on their charts and were like, which stocks haven't really participated that much, and they just bought up Google a little bit. It's got to really stay above this 136.72, which is the 78.6. We had filled the gap, pulled back quite a bit, but I think you could use this day as low as a stop now, 136.08 if you're long. Anything below there probably pulls back to the 20 and like 50 MA area, and the 134s, 133s. So has to hold there for still higher. Amazon, this had a pretty big boss breakout move. It looks to me like it may want to go to 164s, maybe even up to 165s, and possibly even all the way back to the old highs. A little bit of a consolidation day. I'll be curious to see how this takes the FedEx news, although they don't use FedEx anymore. So if anything, I think FedEx is weak because they're not using, they're not delivering for Amazon anymore. So still looks all right to me. I think pullbacks are still viable as long as it holds 147s. I mean, that's a pretty big pullback, but that was sort of the kind of breakout area. If you want to trail up your stop below 152.69 as a stop, that's okay. It's been a little choppy lately, but pattern still looks good. It sort of looks like it's in that blow-off mode. I think people just saw Costco, which has gone parabolic, and they're thinking, maybe Amazon goes too. Getting a little extended dubstep setup, I would use a raise stop to 669.12 now if long. Could this just consolidate for a few days? Also very possible. End range, if it keeps popping, is maybe 723.92, which would be the 2.618 extension. We're blue through the 2 times, so it doesn't surprise me there's a little consolidation here. So yeah, just keep raising stops. Walmart finally getting a little bit of love. Took a little time, but I wouldn't let it get below 154.64, and for sure, I'll just say 154.13. Below there to me would be too much and probably a short. but anything over the 200 MA here could continue, maybe even to as much as the 50 MA. I do think that 159 to 160 area is probably some resistance, but I would trim a little at 157.33 if we do continue with strength, but careful below 154.13. That would be a little iffy. Booking. This also is the channel high monster. I would trim a little up here and just keep raising stops. I mean, if we pulled back just to retest the breakout, that's 32.07.32 to 32.51.71. I think low of day is a good stop. 34.78.93 below there. You could even maybe try short. AFRM, they've had a deal with Walmart, but now they're going to have kiosks. So, all right, that's cool. The old reference low was 46.50. We had a back off there. The next kind of key level was 54.06. I mean, this to me looks like there's a lot of room to the upside, but shorter term, it's probably moved a lot. I'd be surprised if this just ended here. But I would say if we got below 46.03, it's probably a short, because this to me could be an excess. The entire day could be excess. I don't know at some point if we're going to pull back to retest that 22.75 to 25.63 breakout zone, but 10 MA is held, so until that breaks, I'd be a little careful if you're trying short. Seems like a short squeeze play to me. PayPal hasn't really taken off yet. This seems like it could be the next to go. 200 MA has been some resistance, and I told you I think it gets allocation money at the start of the year. I'm cool buying dips as long as the 20 MA holds. That's been that in the 10 MA. So 60.42 to 58.98. Don't let it get below there. Anything below 58.95 could get slippery. All right, so keep that on your radar. WYNN Resorts. This looks kind of like middle of the range to me, but I'll keep it simple. Anything over the 50 MA could rally. Anything back below it is short. Remember, we've seen it over can continue. Below it just seems to dump. Last time that happened was 11.9 right on earnings. So we're coming into the 100 MA, could have a little resistance, but if we were to get to channel high, it lines up with the 200 MA, so maybe they do make a run at a hundo. Carvana. Wow. Back below 57.19, I would probably try short, but this also is in that sort of the crap rallies last, and they're trying to take off. I mean, could we get up to 110? I mean, broke down from 99, so if they're going to play the squeeze game, this could be one of them. But very simple, long over 57.19, below 57.19, stop out, or, you know, maybe even try short. CarMax is the better of the, you know, used car, new car. CarMax is really more associated with used cars. This 77.44 is where we broke down from. Maybe they run it up to 79.69, which was the 927 full gap fill. But this is the bottom of the gap that's filled, so I would trim a little here. The key MA on pullbacks will be the 200 MA, I think, at least short term. If it can't hold there, it's probably got a lot more to pull back. But I would be a little bit of a trimmer up here, particularly into strength. FedEx. So it was up into numbers, always a little dangerous. It's down to 252 in the after hours. So this is a key zone here at the 50 MA. If that fails, the 11.13 gap fill and the 200 MA line up nicely down here at 245. So that could make a difference. I'll be looking to see how this trades in the morning, if they buy the dip or not. It kind of closed near the lows of the after hours session, which usually means there's a little more to go. There'll probably be downgrades and all that tomorrow. I would say that the bulls, I mean, if there is a morning bounce, they'll probably get it up to like 263s, but maybe not more than that. So, you know, just keep that in mind. Nike, they're going to be reporting too. That's going to be a big one. Be a little careful if it's up too much into the numbers, considering where we are. I've been thinking that this area would be sort of my end range. Maybe they have a little more to go into the 28s and 30s, but don't let it get back below 119.84 on you. And that lines up nicely with the 10 MA. Nice new raised stop. If they keep rallying into the numbers, I would trim. I mean, you know, it wasn't that long ago. In September, Nike was $89, and it's now going to be kissing 122s to 124s. So I would be careful and don't let it get below 119.84. Just very simple. Have a great rest of your week. I'll see you for the weekend video, late night Friday, early morning Saturday. Cheers.